still live within your budget. Don't be going to spend, I got big money now. Live in that $500 budget range.
Hey guys, it's your boy Donovan Johnson with my co-host
Scott Warner.
Real Talk Real Estate. Like, subscribe. We got our Facebook page now. I'm sure the Instagram will be going up and the TikTok as well. Shout out our boy Sean Murray behind the mic, South Africa's finest. Today we're going to be talking about
Credit score.
Credit score. It's like your ACT score or ACTS. I did the ACTS. I took the ACT. What was your ACT score?
I don't even remember. Is that the one that like goes to the 1700s?
Yes. I took the one that was 0 to 36.
Oh, that's the SAT.
ACT is 0 to 36.
No, I thought SAT was.
SAT is the hundreds.
Sad face.
So mine was, I had a 25, but the coolest part was I was so stressed about it until they said in the beginning of the book, like, just know nobody's going to ask you your ACT score the first day of college. Congratulations on making it. Unlike credit score, though, they will keep asking you about it. And I know it can be a sticky subject, and believe it or not, your credit score affects your interest rate.
Yeah. Why does it go from 6.5 to 8.5? Well, trust me, it adds up quickly. But the thing is, your credit score is key. If you're like sitting at a 600. Boo-boo, I'm sorry. You need to bring it up. Just like that Taco Bell lady that we were talking about. She had to bring it up. And so paying off things, doing the right things, got to get it up there.
Side note, I have seen a 580 FHA loan hit, but that instead of a 3.5% down payment, it was 10% they had to bring to the table.
Dang.
So... But hey, I'm glad that FHA had a kind of looser standard. Same thing with a VA loan. There's a little bit for the vets. They kind of give them a break. Now, you're still going to have to pay loan costs. You can lump that into the sale, but...
I mean, all right. So like we said, we were going to start this thing off by credit score. That credit score ranges from 300, not very good, very bad, to 850. But in the mortgage world, 620 is usually the minimum for loans. But if you want a solid rate, you're looking in the 740s and up. You got to be there.
And the better your score, the lower the rate, and vice versa. The worse your score, the more they're going to charge you, because they're making a financial decision on you by giving you a loan. And the worst thing they want to do is foreclose and take a loss on their books.
Yeah. So I wanted to talk about something with, like, if you buy with your couple, your marriage, your significant other, I think that they match them together and divide those by 2, and I think that's the credit score that you go by. I'm not 100% sure,
Dude, I think I had a couple that one credit score was like 790, like almost bumping 800. The female had some credit card issues that still weren't. I think they were getting almost paid off, but it was still flagging on her account. We had to go with the lower score. I don't even think they averaged them.
Oh wow! See, that's why I always say I'm not a mortgage guy. I'm a real estate guy. But do you know how they're actually calculated? It's pretty interesting on actually how they calculate it.
Bro, I did some research and it surprised me actually.
Okay.
The breakdown of it all.
Yep.
And I thought that the length of credit history would be higher, because if you can show that you've had these accounts long, I felt like it would have been like 40 or 50%. It is not the case. That is only 15%.
Yeah.
The breakdown, payment history, which first and foremost, 35%. So are you paying your bills on time?
You got to do that. I think the next highest one is credit utilization, and that's like, how much credit are you using? You have to be smart with that credit. That doesn't mean open up a credit card every chance that you get, but I mean, and then you have, like you said, the length of it. 15%. 15%. I've had this card for 10 years. It's not, I mean, great. You have it for 10 years, but it's just not looking that good. Credit mix, different types of credits, credit cards, homes, cars, everything. I mean, that is a 10% hit. I mean, the last one I think is the new credit. What is that at?
Another 10%.
Okay. I mean, that's the thing. Yeah, your recent inquiries. So, like, if I go buy a car, they inquire about it. It actually helps. Do not go buy a car every week to try to get your credit up. No, that's not going to happen. I mean, so if you're maxing out credit cards, opening a bunch of accounts, forgetting your bills, guess what? You're screwed.
Boo.
Yeah.
They're gonna look at you like you got the measles or you got leprosy.
Yeah. They're not going to be touching
Credit
you with a
leprosy.
10-foot pole. I mean, 30-day late payment. How much do you think that
Dude,
could drop you?
you can get smacked in the forehead, like 50 to 100 points, if not more, if it's so out
It's
of pocket.
crazy. It's crazy how much these things. And guess what? We don't get taught this in high school. We don't get taught, hey, your credit's actually important. You need it.
But and dude, what's crazy is that they do you dirty at places like Marshalls. You go and buy some, shorts and maybe I'm a big hoodie guy even in the summer. You go buy some hoodies and stuff. They're like, "Hey, you want to apply for you want 25% off today?"
Yep.
And most people are like, "Yuck, yeah, I want it." And then before you know it, you got a credit card opened up and you go buy something else and they're like, "Why you got this high interest credit card open
Yep.
right now?" So, if they do that to you, please go cancel it immediately.
Please.
Like, for the sake of me and Scott's livelihood.
Yes. All right, let's tie it back to mortgages. Most lenders use middle scores of the three bureaus, Experian, Equifax, and TransUnion. I mean, those are your three main ones, and like I said, they use that middle number. I mean, if you're buying with somebody, if you're buying with somebody, like you said, they might be using that lower number. So, when we're talking about equally yoked in marriage, I hope you start looking at credit scores when you start checking out that girl to date and girl to marry.
So, did you know Sarah was gonna be the partner in a CPA firm?
No. No,
Really?
I didn't. She was
You
working
just
at
had faith.
she was working at a CPA firm in New Orleans, but I knew that she wanted to be partner, but yeah, now she is, and she's like, "Wait, why do I have to carry your credit score around?" I'm like,
Ah,
but getting back to it.
you gotta shout out the person.
Shout out to this person that supports us. It doesn't affect whether you get approved. It directly impacts your interest rate on your monthly payments. So if you have a lower credit score, you're going to be paying more a month than somebody that's with a better credit score.
So, just a quick breakdown.
Yeah.
620 and below, not impossible, but definitely tough. Be ready to pay more up front. Be ready
Yes.
to have to maybe even explain,
Hmm.
even because they're gonna look at it and question you. So you might as well have the ammunition ready.
You might as well.
620 to 699, okay, but some higher rates. You start getting that 700 range. Hey, now you're cooking with a little Crisco. 700 to 759 about.
Yep.
Looking good. Now 750 plus, you may be able to go like rent out the bank dang near. As much as they're going to be, you're
Yep.
very you're very bankable at that point.
Yep. So let's talk about real life scenarios. Have you ever had a deal fall apart because of credit?
For sure.
I mean, I've had a couple. I mean, one client has 730 credit score when we started. They bought furniture. They bought furniture and used it $8,000 worth of this furniture. It changed it from 730 to 670. Rate changed, loan almost tanked. I mean, when we say do not buy something on credit when you're buying a home, don't buy anything. Don't.
Also, don't sink the money. Like, even if you say, oh, I didn't buy it on credit, but I use my debit card, like, if they go look at when it goes to the final clear to close and
Yeah.
they maybe check your bank account statement and you have way less money than you did at first, they're going to be like, what happened?
Yeah.
Now you have to explain
You have
where
to
the money
explain.
went. And if it's not it really is no legit excuse, but you can just wind up really canning your deal and maybe not getting the home you really desired.
What if you tried to be a good Samaritan? What if you tried to be a good Samaritan and co-sign for somebody?
Bro, if you can't buy it yourself off rip, don't co-sign, but I would strongly if you're in the buying process, like, don't do it to yourself. It's almost like loading a gun and giving it to somebody and hoping they don't shoot you when they could easily shoot you. And, like, 'cause it's worse when it's family members or
Yeah.
a really close friend because your heartstrings may start pulling, but a cosign basically means you're walking hand you are married to that person. You are doing business with that person. You're
Yes,
getting
you're
in the same bed as them. I'm only emphasizing this because they go down, you go down. They miss a 30-day car payment, guess what happens to your credit? Plummeted, and then you're stuck with the bill.
Yep.
So imagine losing not just your loan, but then losing maybe your nest egg you add up because now you're liable and to join it at the hip.
Yeah. So question, what can people do to boost their finance score quickly?
So it took me a while because when I first got a credit card, I didn't realize this, but my bank told me that to keep it under 30% utilization, meaning $1,000 by the time the next credit card bill rolls around, you want it less than $300 balance.
Mhm.
It just shows that you're capable of being lent money and be able to get it back. Making payments on time. So auto pay, really, really big. And I was at a point when it was really tight and I felt like auto pay may have screwed me from being able to like get gas and stuff. But now a lot of my stuff is auto pay just so I don't goof off and drop the ball. And
Yeah.
there usually is a day or two grace period, but why would you play with fire with something that's so important? Like you worked so hard to get there. Why would you shoot yourself in the foot? Like
Why?
nobody's Plexico Burrs here. You know what I mean?
Yeah.
So
One other thing, people might want to do this, but don't close old accounts. Keep that credit history alive because it makes you look better. Now, once again, don't open credit cards up every day to be like, "Hey, Scott says we need to keep credit up." No, it's a balancing act. I mean, and another thing, like you said before, ask for that credit increase. Ask for that credit increase because guess what? Utilization does matter. But if you get a credit increase, don't be stupid and go buy something big. Still live within your budgets. Still live like if your credit limit is 2,500, don't be going to spend I got big money now. Live in that $500 budget range. And I think that's what people have a problem with. It's really living within the budgets. Um, Long-term game. Use credit regularly, be responsible. You gotta be responsible. Don't apply for every credit card out there like we talked about. Monitor your credit score. A lot of people don't even Credit Karma. It might not be like the perfect, hey, it says that you're a 720. You might be a few credit scores off of that, but the thing is, monitor it. Be ready for it.
and if hey, life happens and
Yeah.
we get that on Real Talk Real Estate.
Yeah.
And if you're repairing something super serious, talk to a credit advisor. You'd be surprised. And there's like doing stuff a certain way could actually help you back into the game if you feel like you're sitting on the bench right now. So use your team and realize that you're not alone. I know we say that often, and if there's one thing we repeat, it's just that you're not alone in this situation. You have people that can help. I mean, I'm sure me and Scott would both be willing to talk to you. Like, we don't need a hard commitment, like
Yeah.
so, yeah.
Let's talk to one. I mean, that's the thing. Be open communication. One cool thing now, though, is that some lenders do a manual underwrite, and which looks for your rent, your utility payments, overall financial behavior. So that is a good thing. It's not all computers nowadays. Some lenders actually do that.
And what's cool is that some government-backed loans like FHA, first time home buyer, and the VA, they're more lenient as
Yep.
far as the underwriting goes. Now, their appraisers and stuff may be more strict,
Yep.
but overall, you may be able to get your foot in the door.
Yeah. Bottom line is, guess what? Bad credit does not equal no house. No bad score. No, it does not equal that. It's fewer options. It's much harder to do, but it can be done.
And here's the thing, it's all about having a game plan.
Hmm.
If you're 6 to 12 months out, that is the perfect opportunity to get your crap together.
Yeah.
Absolutely, because that gives you enough time. You're not rushing. And yes, you could be looking at the market of kind of maybe what you're feeling like, but at the end of the day, you have to realize that how do you eat an elephant? One bite at a
One bite at a
time.
time.
So it's the small changes. It's the daily effort that adds up to this. Like you don't just grow. Like if you're working out, you don't just grow the muscles, man. Like it's a day in, day out. And they say that like I forgot the rule. It's basically like you won't see the change right away, but like your friend may. And then eventually, after so long, you'll be able to look in the mirror and be like, dang, I really am like glowing up right now. And your credit score can do that too.
I mean, look, I know that this episode probably has you stressed out. Do not panic. Just start where you are. Seriously, start where you are, clean it up, build it up, be patient.
And keep in mind, a lot of us in the mortgage industry and the real estate, we are commission based. So we close when you close. So we want you to be in the best we want you to be in the best shape credit score wise so you can have more options so we can all come to the table and everybody be happy.
Yeah. Well, guys, this is the end of this podcast. But like Donovan said earlier, look us up, find us. We're on Facebook, Instagram, TikTok. Find our faces, find our goofy mugs. You'll see it there. Hey, comment, like. That's the best thing that y'all can do for us right now. Share it. See y'all next time.
Yeah. And thank y'all so much for just being on this journey. We know it's the journey before destination. So thanks again. Later.